Hello, investors. It's Don Vandebord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 26th, 5:30 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market continues to be mixed. We're in a longer-term correction, short-term uptrend, holding on to the short-term uptrend for dear life as we await the big Fed announcement tomorrow on interest rates. You can see over here on the trend gauge. Leaders, tough day for the 21 over 21 list today. We'll take a look at some of the big losers there, backing off the arrow a little bit and still staying on neutral for leaders. Big disappointment really is the way Tesla's has acted over the last couple of days after the nice gap up and follow through on day two after earnings. That's a big stock that can lead the market higher, but tested the bottom of the gap up range today. That's not something you want to see. In fact, we sold ours. We'll discuss that when we get to the tail of the tape. So not the best action from leaders. Short term still continue to be bullish / uptrend. However, you can see the arrow has changed to red because of the underperformance recently, although we are still holding the 21. That's the key, and there's still a lot of news that could push this either way. We lightened up a bit today in anticipation of that. Medium trend, 50-day moving average, still neutral. We're still above the 50-day moving average, but again, pulling back right above it. One bad day will blow right through the bottom of it. Long term, still bearish, have been since, seems like forever, but 414 when we went from neutral to downtrend. So that's the overall look on 3 time frames in the leaders. What happened today? NASDAQ 100 lags again. Seemed like people were wanting to sell Google and Microsoft before their earnings. However, they're holding up okay. Microsoft was down, now is about flat. Google up about 2% after earnings. So NASDAQ lagged again, third straight day, but the indexes did hold the 50-day moving average. G6, this is our growth proxy, minus 1.43%, S&P down 1.15%, NASDAQ 100 down 2%, Dow down 0.7%, mid-caps down 0.6%, Russell 2000 down 0.7%. Global diversified 60/40 stock bond down 0.66%. In-house, our flagship Protection down approximately 0.85%. Still positive from this last entry into the market. We'll discuss that and how we're going to manage our remaining positions later on in the video. So let's get to the tail of the tape. But first, I want to remind you what we do here at Revere. Trend following is how we manage our clients' accounts, meaning we go, let's just take a look at an example here. So here you've got an uptrend last October to December. We were long during this. Then we start going sideways. We start taking money off, and then you see we roll over, get below these lines, the green line, the 21, the red line, the 50-day, the black line, the black line, the 200-day moving average. And once we start getting below that and rolling over, we start taking positions off, get more defensive. And then when we get below the 200-day moving average, we're especially defensive until we get some short-term signals to re-enter the market. We got some here. We got one for about a day and a half here, day and a half here. We've been re-engaged here for about a week. You can see we're coming down, and as long as we're holding the green line and the red line, that's the 21 and the 50-day, we'll stay positioned in the market, but we'll stay defensive for a good part of our portfolio because we're beneath this black line. That's the 200-day moving average. That's when risk picks up and is highest in the market. All of the big sell-offs in market history all occur once you break under this 200-day moving average. We've got a lot of headwinds going on. We discuss them all the time. And if you're interested in this approach, reach out to me. Email don@revereasset.com or phone 855-REAL-WEALTH. That's 855-732-5932. So let's bring up the tail of the tape here. And constant headwinds here. These have been on here for months now. Strong US dollar, inflation that has not been able to be corralled, Fed tapering and balance sheet reduction, rising interest rates, and the Russia-Ukraine war, all affecting the markets in 2022. Put call right around 1. VIX up 5.7% today. 24 not really elevated in any way, shape, or form. Fear and greed is at a 35. That's actually down 3, not unchanged. So that's in the fear column. So sentiment, very clearly not overly bullish, but not to the standpoint that it can put in bottoms. So we're battling back and forth between this bull case and bear case right now. Hanging on to the 21, hanging on to the 50-day moving average. We did get a follow through day, then we pulled back, but we held it. So the trend gauge really tells the story of how the mixed bag is going on with the market. So some notes: 5 of the top 7 report earnings this week. Let's take a look at Microsoft and Google before we get into the indexes very quickly, as those are the headline stories. And down 0.5%. Microsoft, you can see here, sold off in anticipation. Can't get above or stay above its 50-day moving average, and below the 200-day. Looks a lot like the NASDAQ 100. And Google, below its key moving averages, also just had this 20-for-1 split. Below the 200, below the 50, below the 21, but up 3% after hours. We'll talk about a couple other earnings reports later, but let's get back to the S&P 500. The S&P 500 and the NASDAQ 100 are the big indexes that we watch. So news coming into today: Walmart lowered guidance. That hit retail across the board. Let's take a look at Walmart. The chart wasn't really good in the first place, had been rallying recently along with the market off this 120 area, and it bounced off this 120 today. Today's low is critical. I'm going to set an alert at 120 because sometimes these inflection points put in a bottom when you have a big sell-off like this. Notice it didn't break the lows of after it had its last earnings report. Doesn't report again for 3 weeks. Didn't break the lows from a couple of weeks ago, despite big volume today. 230%, 7%, was down over 10% at one point after hours yesterday. So did this put in the bottom? We don't know. We don't guess. I'll use this as kind of a sentiment indicator to see how things are acting in the defensive retail sector, because pretty much all of the defensive retail stocks got hit hard today. Dollar Tree had been holding up pretty well, pulled back, high volume, held right at the 50-day moving average today. Dollar General down 2.5%. Undercut the 21, still above the 50. Ollie, which really gave it up yesterday, followed through the downside today, breaking through the 21 but holding the 60 level, down almost 5%. BJ's, probably the best looking chart of the retail discount variety group, putting in, note how it gapped down but came back above the 21 and finished at the top of its range. This is a support day for BJ's. People tried to sell it off, but volume ended up below average, which is significant considering how hard all of the other stocks in the overall arena of retail discount got sold. And finally, Costco, pretty expensive with a 42 PE and only 10 and 11% growth over the next 2 years. It got down 3%, broke below the 200-day moving average, but still holding above the 21-day. Now, people have to spend their money somewhere. Apparently Walmart's problem is not that people aren't spending, it's that they're having to mark down to get them to buy, and they're buying cheaper stuff. So there's an inventory balance issue there, very similar to what Target reported a little while back when it had its big gap down on earnings, and then afterwards you can see Target really not going lower since then. So maybe the worst news is priced in. Maybe we've got more of a recession to come. Who knows? Americans do need to spend money. The problem is fuel is so damn expensive, and that trickles into every aspect of our lives because products have to be made, have to be delivered. Bad stuff when energy is high. So Fed 2 p.m. and then the press conference at 2:30 Wednesday. Thursday we've got Q2 GDP. Now, of course, we predicted it. Big argument on the definition of recession. You're seeing that now. And then Friday, not really reported, widely reported, but there's a PCE inflation indicator coming out on Friday. That might be actually the most important thing that we see all week. So we'll be keeping a close eye on that. Let's get back to this S&P 500 and what we were watching for coming into today. 39.19 on the S&P. That's the 50-day moving average. We undercut and reclaim that. Pretty good. If you're looking for good news, well, we could have undercut it and just kept going lower, but undercut it, reclaimed it, holding for now, up a little bit after hours from 391 to 392 basically on the S&P 500. On the NASDAQ 100, we're looking for this 293 to this Fibonacci area, which is a 50% retracement of the recent move up. Let's take a look at the NASDAQ 100, and what I'm talking about is from here to here, a 50% retracement of that just so happens to coincide with the 21 and the 50-day moving average. We undercut that, 294.18 and bounce. So good news, we're holding it again after hours. You can see up 0.5% on the NASDAQ 100. So quite a critical area here with that Fibonacci level, the 50 and the 21. Big news, the Fed algos tomorrow after 2 p.m. We'll try to shake out the bulls and the bears. Then usually you get a direction into the close, and then quite often the next day is the complete opposite direction into the close. That's why we lightened up today. So let's get here. So bonds were faded actually in the afternoon. They were strong most of the day, but faded in the afternoon. Something very interesting while the market was selling off. Biotech got stronger as the market was selling off. Started out as one of the weak sectors, along with retail, of course, got hit hard, as I mentioned, because of Walmart, transports weak, software weak, and tech stocks weak. DBA, that's agricultural commodities strong, defensive charts strong, that's utilities, healthcare, and real estate, and gold stocks oddly strong after taking a beating yesterday on Newmont. So biotech bouncing off the 50-day moving average. This is a pretty key chart. Let's take a look at this. There's two of them. So you got IBB. This is the bigger cap biotech ETF bouncing off the 21-day moving average. And you got XBI, which is a little more the growthy names, bouncing off this 80 level and the 21-day exponential moving average. Let's look at an intraday chart on this. So you can see on a 5-minute chart, this just kind of started taking off right at lunchtime, faded into the close, but look at what the S&P 500 was doing around lunchtime while it was going up. This was fading. So some very interesting action, money very obviously flowing into biotech today, as it's one of the few sectors that finished positive. So where are we now? Portfolio, what'd we do? Okay, Tesla, let's go to there first. Let's go to a daily chart and week along with the NASDAQ. So here's the big gap up on volume after earnings, closed at the top of the range, made a higher high on day 2, then faded into the close, then faded yesterday and faded today, held the ADMA. The bottom of the gap up day is 764.60. Today's low 768. So within $5 of that, it's up after hours because the QQQ's up after hours. So anyway, we're out of it. De-risking with all of the data coming out. When we get in and we get some gains, you never want to have a decent gain go back red. So when we ended up booking like a 0.1% gain or something on this. Celsius booked about a 3 or 4% gain. Double inside day. This actually held up very well today. Volume was light, holding the ADMA. Honestly, it was just a de-risking thing when it broke below this 80. When it broke below this 81-ish area, this is where we were selling, and then ended up putting in a decent day on light volume. clearly has the opportunity to be a leader, as this is one of the nicest charts that you'll see in the market if the market rights itself. So we booked a small gain on that. And then we took our SSO position down when we intraday broke the 21. I mentioned we did reclaim it. But de-risking into the close, and with the big earnings after hours, you never know how well that can go. We still had a small gain. We've done 4 buys on SSO. Right, I said I wanted to talk about how we're going to manage them. So let's talk about how we're going to manage them. So our 4 buys were done on SSO at, first one was at 38.51. On the 15th, we did 2 on the 15th. First at 38.51 and then at 38.57. So this here, it was when we were coming back up through the 21-day moving average. We sold off the next day, still held the lows, then made a beeline back higher, and we added on the 18th and we added on the 19th. We added on a higher high here before it reversed, and then we added on the 19th and we got back above. So we got into this 4,000 level. We've made enough progress that we're not going to give our gains back. So took a 0.5% gain on this one. Sold it at 39.18 when we broke below the 50-day moving average. So we're still holding the 38.87, which was the third buy. And the good part is that the 21-day moving average is now above our 3 entry levels for there. It is at, as you can see, 38.98. Our 3 buys were 38.87, 38.57, 38.51. So we'll be able to get out if the market turns south. We'll be able to get out with at least small gains during this trip back into the market as we try to find a bottom. A lot of people saying this is the first leg down, this is the second leg down, we're in the middle of the third leg down. It doesn't matter what people think, it matters what happens in the actual performance in the indexes, and that's, as always, what we'll be keeping an eye on. So we're down to a 40% equivalent of the S&P 500 by owning 20% SSO, so the equivalent of 60% cash. Bottom line for today, QQQ lags for a third straight day, but the 50-day moving average did hold, and we've got the Fed tomorrow. You can see the support and resistance areas here with today's close at 39.21 versus yesterday's close. We've got the overhead resistance levels here. We've got the support levels below it. The key one, this 38.98, the 21 EMA, and this 50-day moving average at 38, 39.19, 39.20, but that's flat. So we prefer that it hook up and go higher, which it was starting to do before the sell-off the last 3 days. So let's take a look at a couple other things after hours that reported earnings. Enphase up 7% after hours. This is trying to break out. This is an extremely volatile stock. Had this 10% gap down here on the 15th when Manchin said he wasn't supporting any green energy projects, and look how it's bounced back since then. That's pretty good behavior for a stock in this market. It's got the fundamentals, 109% EPS growth for what was just reported. So that's looking good there. Another big one that reported, Texas Instruments, up 3% after hours. Always like semiconductors to be acting well, as they're such a big part of what goes on in tech land and really all products. And CMG up 8% after hours, still below the 200-day moving average, but it's going to be up around here above these recent highs in the 14-ish area. Right now it's at 14.25, assuming that holds. And that looks to be all the big after hours earnings that we want to talk about. Let's talk about some ugly charts in the 21/21 today. A couple of these really giving it up. If they don't have a strong comeback, they're going to be coming off of the list. So here you see Chewy, textbook rejection at the 200-day moving average here. Perfect place to get out if you owned it, and now gapping below the 21. This is really, I guess, the reaction to what we saw with Walmart. Above average volume today too, so Chewy down 8%. Fortinet, FTNT, big ugly candle. Didn't see any news on it today, but it was setting up as one of the leaders if it could break above those recent areas, but down 8% today. Not so good. Bros, another one I was watching, trending higher on light volume, riding the ADMA. Just in a couple of days, broke below the 21-day and the 50-day. Volume still light on Bros. Gtlb, this has been another recent leader, but as far as riding the 21 higher, but broke below the 21 today. SI, Silvergate, below average volume on this pullback. And remember, I pointed out these 3 days of up volume. The second day after earnings, that's very rare. It's usually very bullish. Keeping an eye on this one. It's only pulled back to the ADMA. But crypto, I mean, it just seems like such a game of musical chairs, but Silvergate is just printing money as they provide a network for crypto. Ollie, tough, bounced yesterday and put in a hammer at least, but broke below those lows today, below the 21, down 4%. Another one of those retail names getting hit hard. Tesla, we already looked at, down 4%. And finally, BMBL. Let's see if this is right on the 21. Yep, barely holding on to the 21. So some stocks in the 21 over 21 list taking a hit. Market is just in a situation where it can't be trusted. Plus, we've got so much data coming out. Maybe we'll have some clarity early next week by the time all this data and the reaction to it ends. So that's going to wrap it. As always, love to hear from you. Email don@reveraasset.com, phone 855-REAL-WEALTH. Remember, in the market, it's not how much you make, it's how much you can keep. That's why we've got sell rules to get us out when the market turns south. There's no reason to give your money back to the market when the signals are there telling you to get out. We're technicians, we follow them, and we're pretty happy with the product we put forth and the videos that we put out. We're very transparent and passionate about financial education, so appreciate everybody following. Wrapping up Tuesday, 7/26. This is Don Vandebord with Just the Facts. Thanks for listening. Have a great day.